If you're watching the news, you're seeing geopolitical chaos. If you're from the professional world, all you're seeing is 140,000 layoffs. Our professional community of over 1,200 students, made up of business owners, directors, as well as VPs, showcase exactly how we are profiting off this volatility that's destroying retail, but we trade like Wall Street institutions. I'm going to showcase our swing trading strategy and how you can do it still managing a 9 to 5, because I was doing that too. Let's get started. Trading comes down to two things: risk management and pattern recognition. A lot of times after coaching over 1,200 students, the first thing that I've noticed, they always come across and usually are looking at charts something like this, which has way too many indicators, and it's literally just stressing me out. I feel like my blood pressure is rising as I'm looking at this. I'm gonna showcase you my chart, because my chart is actually very clean. All I have is candlesticks, some things, and you can see pretty much everything. All these things in blue, that's me actually adding it because I want to discuss it with you. Now, risk management. We realize we are in a very risk-on environment. As of Friday, March 20th, we have the Middle Eastern conflict. We have been in choppiness zone for several months. So as swing traders, we only look at the daily and the weekly, and sometimes occasionally the 4-hour, but we do not go through 5-minute, 10-minute, 10 seconds. That's like stuff. Now, we are all very busy. We're all professionals. Let's look at this. The risk-on environment. We have been in a choppy zone ever since October. Choppiness means it's consolidation, which means that it's trying to find a direction. There was more risk going long versus going short. So we just were waiting for confirmation, because this choppiness as traders can kill you. And realizing this risk on environment, this is in the shorts. Now we are confirmed shorts, which is much better, because now every single high will try to be shorted, which gives us opportunity. How do we even find these things? We screen, and it typically takes us about 30 minutes. I use FinViz, and I have it off the weekly, and this is just how we're screening. And this is the part when you're realizing the pattern recognition, we can literally screen and see very quickly. Because look, we were mentioning XLF as the sector. Citigroup, C is also doing the same thing, Bank of America. So we're following them. Wells Fargo is particularly very strong. We are always following the rotation of money. Morgan Stanley, they're literally following the money. So their money flow is going through there. And we also know too that risk management right now, the environment is very much risk on. Instead of putting, let's say, a full position, well, we would do a partial or maybe half a position size, because we are very aware of the volatility and the risk on environment, especially with the Middle Eastern conflict. What are Wall Street institutions doing? One of the biggest things that I will give you like an insider tip. Whenever the market, in particular the SPY, is taking a massive jump, you want to look at what other rotations are happening. Because even though I have this isolated ETF list, you can see literally there's a sea of red. However, there is some green. One of them is XOP oil, and this is obviously due to the Middle Eastern conflict, but the other one is XLF, which is financial institutions. We always want to follow money flow, and Wall Street institutions is how at Trader Foundation we trade. So this is like the biggest thing. We have massively dumped. On top of that, we are showing signs of a floor. This is a very clear area of support. There are buyers coming in. This is the first sign of an accumulation candle. We obviously went all the way up from 56 down to 48. And so this is where I see the biggest opportunity. And this is the best risk to reward. As you can clearly see, I already labeled it out. Now I'm also looking, because, within XLF, we start looking at the individual tickers. So if I pull up MA, which is Mastercard, you can see as well, all right, so we had kind of like a rounded bottom situation. It looks like it is trying to find a floor right around here. So it might reach for 478 first before it starts going up, but it's getting close. This is actually another observation too that I noticed. You will not see me reference these indicators, but it's starting to find a floor. This is one of the lowest points. So we are at the lows. I'm expecting it to kind of move up. And on top of that, showing it with Mastercard, as well as BAC, Bank of America, is actually one of the strongest ones, because we have a doji candle, a lot more buyers. That's one of the things that I'm looking at as best to risk to reward, because out of all the indexes, we are starting to see signs of change, and money flow definitely occurs, and it looks like it's finding a floor with an XLF. Regarding risk management, we already are well aware that the environment is super volatile. We just established that with the Middle Eastern conflict and now the volatility of the markets, because when we do have a short squeeze, they are massive rippers, and you can see it in the charts. Now, let's just say hypothetically you have a $20,000 account. I'm using my phone so that we can do the math together. $20,000 in your account. Now, we are already aware of a risk on environment, so I would recommend just doing, let's just say, putting 400 into a trade. With proper risk management, that $400, you'd only let it go down to like 30 or 40% within the options world if the trade goes against you. And especially right now, given the market environment, you are going to put smaller positions than you normally would. And it's just because you have to be aware of the environment that you're in. Our live masterclass is already full. But if you want to work with me, there is a sign up sheet below, and I'm only taking 5 students because we already have 1,200 students in our community. I can't take any more.